Hello and welcome back to Moneycontrol's live stream. You're watching Closing Bell with me, Lovisha, Darad, and joining my colleague Yatin, Mota. Well, Yatin, once again, no turnaround today. Both the headline indices continue to sulk for the third straight day. If you look at Sensex, that slipped over 500 points, and Nifty also broke below that 24,700 mark. But yes, all the barring your Nifty Fmcg and the Nifty Pharma index, all of the sectors nosedived into the negative territory. If you look at Nifty Realty index, that was one of the top sectoral underperformers for the day. Apart from that, Nifty IT also didn't do well, given that we did have a Moneycontrol exclusive, which did say that TCS is planning to cut about 2% of its global workforce, which will impact about 12,000 jobs in FY26. So yes, that's a Moneycontrol exclusive, and we can see that Nifty IT was also down with about 0.5% cut also. Trimmed some of its losses from its day's low, but still settled with about 0.7% cut. On the other hand, if you look at the Nifty Metal Index, that also showed a selling pressure, and that ended the day with about 1% cut. Midcap and small caps continue to underperform. Midcaps down for the third consecutive day, small caps down for the 8th consecutive day. So yes, all in all, the pressure has been felt quite imminent in the markets, and India VIX, once again, it's risen to about 7%. So that kind of shows that there is a sense of fear in the markets at this point of time. So yes, Yatin, all in all, we are seeing pressure in the markets, no turnaround, and of course, valuations seem to be quite elusive for the investors going ahead.
Yes, and you talk about valuations, and that is clearly linked to earnings, IT, Reliance, and now private sector banks. After Axis Bank, we have Kotak Bank, which clearly disappointed with numbers. We also had Bajaj Finance, wherein the commentary was more on the asset quality deterioration as well as the slowdown in certain sectors that they are looking at. So yes, earnings have disappointed, and probably the markets are now adjusting to the earnings. Nifty below that 24,700 mark, advance decline ratio almost 1:4, and the kind of breadth that we lost, especially in the second half, is quite big, because the market continues to sell off, and after we broke that 25,200 mark, then the 25,000 mark, clearly technically also we are looking at some weakness which could there be in the near term, especially in this expiry week, which is expected to remain volatile.
That's right. Let's also see some of the top gainers and movers on the Nifty 50. The top gainer is your Shriram Finance, seeing a gain of about 3%, did well on the back of its decent Q1 results. Then we have Cipla with about 2.5% gains, up for the 5th day on the back of its decent Q1 results. Hero MotoCorp, HUL ahead of its Q1 earnings, which will be scheduled later today, doing well with about 1% gains. Asian Paints also doing well ahead of its Q1 numbers, which will be due tomorrow. On the other hand, if you look at the way down, Kotak Mahindra Bank, like Yatin was also talking about, that most of the private lenders have been disappointing their Q1 results, and we can see Kotak Mahindra Bank's profit numbers did disappoint. The street estimates fell about 7% on a Y-on-Y basis, and that's why we saw about 7% downtick. On the other hand, Bajaj Finance also with about 3% downtick coming in for Bajaj Finance, down for the second consecutive day. Wipro, IndusInd Bank ahead of its Q1 results, seeing a cut of about 2%, and Bharti Airtel and Titan are some of the other losers on the Nifty 50 pack. But yes, what continues to sulk day after day is your mid-cap and small-cap indices. Yatin, what are you gathering? What do we have as the top shakers and movers from there?
Yeah, so if you look at the gainers, Acme Solar posted the numbers, stock was up 9%, Laurus Laboratories, two things, the numbers were good, and more importantly, they have announced an expansion plan for which land acquisition has been done. So that stock remains in focus. Chennai Petro, after the quarterly earnings, slipped 7-8%, but it was largely inventory loss, and today the stock bounced back nearly 5% higher for that one. Aadhar Finance, reacting to the Moneycontrol's exclusive, that stock moved 4% higher. What was not doing well is Home First Finance, 7% down. Lodha post the block deal as well as the numbers. Stock is under continuous pressure. Today the stock hovered around that 1200 mark, down 6%. SBI Card, weak numbers, 6% down. And GMDC also post disappointing set of numbers. That stock slipped nearly 6% in trade.
That's right. That's what we're gathering from the broader end of the markets. But now let's quickly break down some of the stocks that did grab limelight today and was the talking point of the day. We'll start off with Kotak Mahindra Bank, saw a cut of about 7%. The lender did deliver weaker results than what the street was anticipating. If you look at the figures, net profit fell about 7% on Y-on-Y basis after excluding the gains of sale of its general insurance business last year. NII also rose modestly by about 6% on a Y-on-Y basis, and margins felt the pain because that saw a contraction of about 37 basis points due to repo rate cut and a reduced share of the unsecured loans. Now, this is the lowest margin level that the lender has seen in the past 14 quarters, but the management has highlighted in its con call that it will bottom out in the second quarter and stabilize thereafter. If you look at the asset quality numbers, that was also not quite impressive because if you look at the gross NPA ratio, that rose due to its stress in its microfinance and the retail commercial vehicle loan books. The bank also increased its provisions to cover the potential bad loans during the quarter, and that also contributed to a further dip in the profit. Now, all of this was on the weak side, but what remained the shining point, that was your loan growth, because that was the best that other private lenders has delivered so far. If you look at the loan book, that grew in double digits, loan growth, which is about 14% on a Y-on-Y basis. And given all of this, however, brokerages have tempered their near-term expectations because if we see Nomura, they have given out a neutral call on the counter and they've shared a target price of about 2150 rupees. They have also cut Kotak Bank's EPS estimates by 3 to 7% for FY26 to 28 because they feel that the valuations are quite rich and the near-term is quite the near-term upside is quite limited from here on. So yes, that's a cautious stance that is coming in from Nomura. On the other hand, if you look at Morgan Stanley, they shared an overweight call and they shared a target price of about 2600 rupees because they believe that the earnings will accelerate from the second quarter, which can also be a tough one. So all in all, brokerages have been very cautious on the private lender as far as right now. But Yatin, all in all, a tepid performance, and compared to ICICI Bank and HDFC Bank, which showed some resilience despite the margin pain that they felt.
Yes, and if you look at Kotak Bank, the second quarter net interest margins also could remain under pressure. Whether or not the microfinance book picks up, MSMEs, obviously Bajaj Finance was of the view that probably there the lending could be slightly slower. PSU banks say that lending could be better. So still, there is confusion in the market, and also if you look at Kotak Bank, the expectations of net interest margins were, quite higher than what the number was actually delivered. So on the margin front also, street was disappointed, and if you look at the asset quality also, clearly showing some signs of stress, especially in the MSME space.
That's right. Now, let's quickly talk about the IT stocks, given we had the Moneycontrol's big exclusive of the IT bellwether TCS announcing about 2% cut in its global workforce, which is going to impact about 12,000 jobs gradually throughout the FY26. Now, the CEO and MD Kritinivasan did tell us that the plan to trim the workforce is not because of AI giving some 20% productivity gains, but due to a skill set mismatch where they have seen that they're not been able to deploy someone. Now, the job cuts will be impacting your middle and senior level employees the most, apart from some entry level associates who have been on the bench for a long period of time. However, if you look at the brokerage reactions, they were not fan of the move. If you look at Jefferies, they noted that the plan to trim the workforce might lead to near-term execution slippages and higher long-term attrition. And they believe that the cost optimization and AI-led productivity will drive most of the deal wins going ahead. So the firms are unable to gain the market share, will have to resort to layoffs at this point of time. On the other hand, if you look at Citi, they also maintain its sell call and they gave out a target price of about 31.35, and they noted that the TCS earnings for the June quarter already indicate some sluggishness in the core markets, and its margin and cash flow trends are need to be monitored going ahead. Now, TCS will be providing a notice period pay and has added a severance package to the impacted employees. It will also extend insurance benefits and offer some outplacement opportunity. Now, this comes weeks after the IT services updated its HR policy. So, yes, that is what coming in from the IT bellwether, and you can see the negative sentiment which was played out in the entire Nifty IT index too. So, yeah, then now that TCS is the first Indian company to announce such a massive cut, it could be a trickling point when others like Wipro, Infosys could follow suit to just optimize their costs going ahead.
Clearly, and the two questions that comes to our mind when TCS talks about recalibrating or reducing their workforce by 2%, especially in the mid and the high level segment, is whether or not artificial intelligence has brought in those efficiencies which are not yet required. from the staff, or probably there is actually a slowdown because of which the manpower requirement is reducing, or it's a combination of both. So yes, artificial intelligence does get in efficiency. Also 20% kind of a benefit is what Krithivasan, who is the MD and CEO at TCS, spoke to. Moneycontrol in the interview, he spoke about this factor as well. So let's see, whether or not it's regarding a slowdown, or actually artificial intelligence has already started taking jobs in the IT sector. But Macrotech Developer, that is also one stock which was one of the top F&O losers in trade today, 6% down for that stock. We have JP Morgan, which has come out with a note. They are neutral on the stock with a target of 1300 rupees per share. They believe that the slower free cash flow generation as well as muted second quarter guidance would be the reason which could lead to profit booking in the counter. In fact, they say that the pre-sales has come in with a number of nearly 4,450 crores with an embedded margin of 33%. And moving forward, if the gross development value addition is slightly slower, then the valuations would be slightly lower than what they are right now. In fact, the remaining launches of nearly 17,000 crores could help once we have some good pre-launch sales. In fact, the collection growth over the coming quarters will be the key stock driver moving forward. So not only the sales, but the amount which gets collected is something important that we'll watch out for as far as Lodha Developer is concerned. But yes, today the stock of Lodha was clearly under pressure, 6% down. And if you look at from the month point, the stock is nearly down 20% from the recent highs.
That's right. And that's why we could see Nifty Realty also coming under pressure, 3% downtrend coming in for the index too. All right, let's move on to another stock in focus. That was your top Nifty gainer, and that's your Shriram Finance. Given that the street was impressed with its quarterly performance, we did see that the standalone net profit rose about 9% on a Y-on-Y basis, and NII grew about 13% on a Y-on-Y basis. If you look at the loan growth, that also rose about 13% year-on-year to about 2.7 lakh crore rupees. What the brokerages believe that HSBC remains positive on the counter. They've shared a buy call on the counter and a target price of about 730 rupees. The brokerage did acknowledge the rise in gross stage 2 loans, which was up about 6 to 9% quarter on quarter for consecutive quarters. But it did note that the management has maintained its credit cost guidance going ahead. Jefferies also gave out a buy call on the counter in Shriram Finance and a target price of 800 rupees. And they highlighted that the 17% year-on-year growth in its OM book was in line with the expectations. And the fact that the NIMs have improved sequentially was due to the related liquidity drag. On the other hand, if you look at another brokerage firm, which is your Motilal Oswal, they also gave out a buy call on the counter and a target price of 780 rupees, calling it their top idea in the NBFC space. The brokerage also noted that the demand in the rural and semi-urban areas remains quite strong, with segments like used commercial vehicles, MSME lending, showing some good resilience without any major stress. So yes, Yatin, the street has given out 800 rupees as the highest target price for Shriram Finance, which means another 25 to 26% potential upside. So that's a big thumbs up coming in for this NBFC.
Yes, and valuation wise, Lovisha, the stock has always remained attractive. But in Bajaj Finance's conference call, or if you look at HDFC Bank's conference call, the commercial vehicle, three-wheeler, two-wheeler lending has seen some delinquencies, weak asset quality and slower lending. Shriram Finance transports, the financing division is something, which will be watched out keenly, because the overall sentiment there, especially in the commercial vehicle segment, has slightly been muted. Whether or not it converges into a slower loan growth or a lower asset quality, we don't know, because second half is when we have the pay commission increments coming in, the festive season will kick. So the market also remains hopeful that probably second half is where you could see things bottoming for the NBFC sector, in fact picking up from that festive season. So let's see. Shriram Finance, as you mentioned, yes, brokerages see a decent upside in the counter, provided we have a good asset quality outcome along with growth in the commercial vehicle space, especially the used vehicles.
That's right. All right, that's all the stocks we have for now. We did start the week on a negative note. We'll watch out, if there's any reversal on the horizon. We have more earnings reactions which will be playing out. We have Fed interest rate decision throughout the week also. So we'll watch out for all of those triggers coming forward right now. But for now, it's a wrap from Yatin and me, and thank you for watching.